Today, another update video about Bitcoin and companies. It's going to be very exciting. I didn't do anything for a few days. There just wasn't much for me to report. I was still sticking to my strategy. We still had our liquidity package down here, this cluster open, even though we kept seeing pumps. In my opinion, we weren't going to leave that behind. At the moment, we're just about to fully pick it up. But that also means, as I just mentioned, and as is well known, that we had this CME gap here, a fair value gap, which has now been half filled, and Bitcoin is now making its way down. I've placed long orders all over here, even down to a price range as low as around $109,000 to $110,000. But that doesn't mean we have to hold this level here. The next liquidity cluster we have is roughly here, a smaller one, but it also served as support with the last high here. And if we actually break down through the CME gap, the fair value gap, and the liquidity cluster here, then for me, the next stop would be down here. And that's exactly what I'm prepared for now. Of course, we're also looking at the liquidity heat map. Not only that, guys, but the ETF isn't doing so well at the moment. In yesterday's video, and I want to point this out again, I talked a bit about the exit strategy, that now is really the time that determines how much cash are you taking out of the bull market. How much cash will you have left when the bear market begins? And you can see now, as we discussed yesterday as well, that as soon as the ETF starts selling off and it becomes a regular occurrence, you should start thinking about whether or not to follow suit. The problem is we've already dropped now. And in yesterday's video, by the way, if you haven't subscribed to my channel yet, I would really appreciate it if you could subscribe, maybe leave a like or a comment on the video. Also, check out the very first video on my channel, which is linked here, and join the Telegram community. We go through all of this together there, including automated trading on Bitget. You can also do it on Bitunix, but with Bitget, you get this 100% passive income on autopilot. It's a super interesting video. It's been really well received by the community. They're also making very good profits with it. But what I actually want to tell you now is that yesterday's video got very few views. It barely reached anyone here. You decide how rich you become in this bull market. I share some deep insights from mistakes I've made, things you might want to consider for yourself, like what an exit strategy is and similar topics. I cover all of that in this video. So that you start thinking, are you maybe going to carry your cryptos with you into the bear market again? Because selling cryptos is considered an absolute cardinal sin. I'll also go over a few examples. And why most people here, I'll share a lot from my friends, show screenshots and the like, just always jump into the hype simply because they heard Ethereum is now almost at 4,000. We have to buy Ethereum now and not, for example, when it was at 2,500. But I'd appreciate it if you check it out and subscribe to my channel. Let's continue now with the interesting stuff regarding Bitcoin and Ethereum. And above all, what are the whales, the really big players, doing right now? I've got some data for you on that. But as you can also see here, where are the next orders in the perpetuals from the traders? First of all, let's quickly go through. What are the whales doing? People with 10,000 Bitcoins or more have already started selling off for quite some time now, basically throughout this entire consolidation. We had a slightly higher price again, but you could see that the higher Bitcoin went in price, as you can see up here, the more they sold off. And big whales don't do that for no reason. And these are the people with over 10,000 Bitcoins. If we look at the people with 1,000 to 10,000 Bitcoins, they chased the price a bit here, which in this case was actually very, very reasonable. But now, during this strong consolidation where everyone is waiting for the breakout to happen, they have also started to gradually sell off. And that's something I keep coming back to as well. When I see that the big players are starting to take profits and they don't have 1,000 to 10,000 or even more Bitcoins for no reason. They didn't get them for nothing. These are people who understand the market. You can see it here as well. When the market drops, they buy in heavily. When the market rises, the higher it goes, the more they sell. And that's exactly the game you should play too, just like they do. I don't think I need to say much more about this. There's a reason why I've marked these two areas here. We'll go through that again with the volume profile. But now we've had this sell-off, which I've actually been waiting for a long time, and now it's time for the update video again. If we now take a look at Bitcoin and just look at it completely neutrally, and we go in here, you can see this area here. If I now turn on the VPVR, unfortunately, we've left the last major volume block that Bitcoin had up here due to this consolidation. You can see it in this area. We've broken down below it. And even if you really want to, of course, it's possible that we get a reversal here and that the reversal gradually takes hold and we start rising again. That could certainly happen, but you should also be prepared for the other scenario, and that's why I've only entered my trades lightly at the moment. Because what unfortunately lies ahead for us right now, and we can see this very clearly down here, is that we're entering an area where there was no volume. And it's precisely this zone that could now become interesting as it allows for a quick move downward. You can see that the first volume block would actually coincide with this lower price area here. And what is this lower price area? Simply put, these are our last highs before we had the breakout to the upside. That means this high here consolidated a bit more, and that was the first major volume block. Therefore, it doesn't mean that we have to make a reversal immediately, but I'm already on my way into my long position and have already had a few orders filled. And on the way down, I'm doing dollar cost averaging to lower my average purchase price because I believe for myself that we should gradually see a reversal here. If not, of course, at some point I would also set my stop losses and let the positions run, but I don't think that's going to happen. We just need to take a quick look at the weekly chart. If we go in here now, because when we look at the weekly chart, it's actually nothing more than healthy price action that we want to see. We're making a high here, then a higher low, a new higher high, and again a higher low. This is healthy price action that we're continuing here. And it doesn't mean that we absolutely have to go up now. In fact, having a small correction here and then continuing upward would actually be healthy. What else would support this? So that we have a divergence here again. You can see it here, and it's not even that small. We simply have a rising price here with a falling RSI. I don't want to say that I'm ultra bearish or anything like that right now. No, I always look at the chart neutrally, and I'm not bullish all the time saying we're going up, we have to go long. No, I've waited long enough now, so now I'm trying to rebuild my longs. And that's very, very interesting. What else could support us getting a bounce now? I'd like to bring in another trend line for you here. I think you can see that better on the daily chart. Exactly. If we just include this here, these highs from back then, you'd have to draw it a bit more precisely, something like this. Then here, if we zoom in, the last high was roughly here. And that could now be our trend support line. Where is it located? At around 113,400 US dollars. Let's take a look at that. Where is our liquidation heat map? At around 113,600 US dollars is the largest cluster. That means we could even go a bit further down here to pick this up, maybe also these highs here. And if we take a closer look now and maybe include this trend here, yes, we might even have this little reversal in this price range here. We'll see how far down we go. So we can say we have a cluster here between the liquidity heat map, between the fair value gap on the CME. Everything is there to be able to say, okay, this recovery has now been sufficient. But we have to wait and see. That's why I'm currently only entering my positions with small amounts and building them up gradually. Because what is happening overall right now is actually a very good bullish pattern. We have a massive bull flag here, maybe a correction that could later drive us to higher prices again. And a bull flag is actually a continuation pattern that is supposed to push us further upward. And to wrap things up, here's why I'm still bullish, really bullish. What I've drawn here, let's take another look at it on the weekly chart and remove this part. And now it gets really interesting. Overall, on the weekly chart, we're actually in a massively bullish pattern. And I don't know if many people had this on their radar or not, but let's dive in here. I'm going to show it to you now. We actually have a truly massive and significant inverse head and shoulders pattern forming right here, where we had a decisive breakout and now quite possibly a retest of that crucial level. And this exact retest, yeah, could cause panic for many people. They might say, let's short everything now because we're breaking down. But on the weekly chart, it would be a healthy retest and could then push us back up. The price target from this pattern would be roughly, of course, you can't take it exactly, around, where was this breakout here? From around 149 to 150,000 US dollars. Of course, it's not guaranteed, but that's something you could keep an eye on. What else could support these price targets? Let's go down to my other chart. There's something else I want to show now. We already have the 2 extension in, but if we look closer, where's the 2.272 extension? And sorry, the 2.414 Fibonacci lies roughly between 135 and 144,000 US dollars. Despite all that, there's something else I want to leave you with. What I've drawn in here. Sorry, let me go in here now. I'll make this a bit thicker. Take a look at this chart pattern. We're at the high, we corrected, move sideways, at the high again, small correction, upward sideways. That's what's happened recently. And I don't want to cause any panic now, but the reason I didn't show this in my exit strategy video yesterday and just said you should think about it is that we had a very similar pattern here. Not exactly the same, of course, but we went up here, sideways trend down, recovery, another brief correction, recovery, sideways trend, and after that, things actually dropped sharply. And that's why I say you really should watch yesterday's video, because if you're not prepared, a bear market can come faster than you'd expect, or at least a more significant correction. I'm not saying we're entering a bear market right now, but a stronger correction can happen at any time. At the moment, when I talk to people, they say Bitcoin won't fall anymore, nothing will happen. Guys, this will keep happening, and we don't know what will happen next in the world that could cause another possible drop, maybe a bigger one, before we move on. I don't think the bull market is over yet again, but that's something we should keep an eye on. What we also have right now is an incredibly good reversal. In the last video, I talked about this. We have so many short liquidations. That means we had about 3-point-something billion in short liquidations below us and hardly any long liquidations above us. And now it's getting interesting again. We now have just under 2.3 billion in long liquidations above us that have built up over the past week, and below us there are actually not even $500 million in short liquidations left. And this is once again the kind of distribution that makes me feel more bullish, which is why I'm waiting for a reversal. If we take a quick look at Ethereum to wrap things up, Ethereum, if we go in here, has recently lost a bit of its weakness. So we've now broken through this initial upward trend to the downside, and we're at this green key level support. That means, however, that we have two more here. So I want to show you exactly this price range here. This wick, if we take that as a new ascending trend support, it would actually align perfectly with prices around 3,545 to about 3,550, matching this key level exactly. And it would also cover exactly this price range here, where we've consistently found support. So if we drop down, that could be our next support level. Despite everything, after we had such a massive pump with Ethereum, I'm still ready if we do dump to around $3,000, where this accumulation happened before we had the breakout, to scale into my positions again here and also to open a few new positions with US Tether, because I'm in Ethereum against the US dollar. I've been long on Ethereum since $2,100, but I would use this correction right in this price range here. It would also be the 0.5 and 0.618 on the Fibonacci, which could be reached here. That doesn't mean, please guys, it doesn't mean that it will happen. I want to be prepared. If prices drop low, I don't want to have entered up here. I really want to get in when we fall deep. And that's exactly the big difference. Why I haven't been going hype long up here all the time. No, because now look at Ethereum here on the 4-hour chart. If we look at this exact high, and what do we have here as well? We've built up another bearish divergence here. And after this bearish divergence, Ethereum started to show weakness. In what form did this weakness appear? We had a high, but now we haven't made a new high. We've actually made a lower high. And if we look at it, another lower high, yes. And now gradually we're also making lower lows again and again. And Ethereum actually signaled this perfectly, which is why I didn't take any long positions up here. I might also trade a bit more long term, but for me, this just wasn't a sign to go long as long as we don't see a bullish reversal here, a bullish divergence or something similar. We're making lower lows and lower highs. That means I basically have to enter blindly, because even on the Ethereum liquidations heat map, there's now more liquidity above us than below us. And here you really just have to wait and see, where will the market makers move things? Where will the price go? You can see it here again very clearly with the lower highs and lower lows. And when is the moment when I say I'll go long again? Because at the moment, the overall market sentiment has been more bearish for me, especially with XRP. If we take a look at that now, then that's it for the video. Maybe it was a bit longer than usual. After we broke through here, I also shared that with you on Telegram. We also had a head and shoulders pattern here. We couldn't make it anymore. With XRP, we tested the bullish price target levels for the first time, the first two. That was exactly this first price area, the second price area. And you can also see how strongly this acted as resistance before we started moving further down. Of course, now we're coming back to a zone with higher volume, which means we could find support here. But I sold a third of my XRP holdings somewhere in this price range, around $3.40-50, somewhere here, because I thought, okay, we've reached bullish price targets. And selling XRP is basically a mortal sin, yeah. I talked about this in yesterday's video, but if you don't take profits, if you're not prepared for drops and you always only go long at the tops, for me, that's not the right time to go long. Short-term trades, sure, but not when I say I want to build up a bit more. Exactly, leave a like. Maybe give me a subscription if you haven't done that yet. And until next time, ciao ciao.